Good afternoon, everyone. It is 12 o'clock. This is Kathy Neifeld with AgencyONE. We are expecting a large group, so we are going to start at 12:02. So I would appreciate your patience for the next 2 minutes. Grab a cup of coffee, a drink, something, and we will start this presentation at 12:02. Thanks so much.
I don't see the Q&A.
Okay, it is 12:02. Good afternoon again. This is Kathy Neifeld with AgencyONE, and I hope that everybody had a wonderful Labor Day holiday and they enjoyed their summer. We can't believe it's September, and we are kicking off September with a webinar on underwriting. And as you all know, this is titled What You Need to Know About Underwriting Now. I am pleased to present my partner, Dennis Bartos, our VP of Underwriting, Jessica Karakoff, and one of our underwriters, Julie Melendez, and the three of them are going to lead this webinar. Dennis is going to kick it off, and we are going to entertain questions at the end of the presentation. So if you've got something on your mind, please type them into the chat box or the question box, whatever you're more comfortable with, and we will address or try to address all of them at the end of the presentation. So without further ado, I'm going to turn it over to Dennis. I just also want to remind everyone that we've got some important announcements at the end of the webinar. So I'm asking that everybody hang in with us till the end so you don't miss some important and exciting announcements from AgencyONE. So without further ado, I'm going to turn it over to Dennis. Thanks.
Okay, good afternoon to the East Coast and good morning to Central, Mountain, and Pacific time zones. As we come into the year end of a most bizarre 2020 calendar year, it is important to touch you on the current state of underwriting. This year was like no other, and our year end is going to be like no other. We're going to be going over how straightforward underwriting used to be on the impairments prior to March the 1st. And how tedious and technical underwriting has become during COVID. There are pros and cons here to discuss, and we'll discuss them all. After about 45 minutes, we're going to stop for 15 minutes for questions and comments at the end, like Kathy said. What you need to know as we begin is that every underwriting niche that existed prior to March 1st, 2020 has been flipped on its head because of COVID. While carriers may be starting to loosen up a bit, as you will see, the rules have changed. There is no normal yet. Field underwriting is more important than ever before. We're going to show you the technologies that we have here at AgencyONE and some of the tools the carriers are currently using to underwrite risks today. Our goal is to give you access to these tools, to keep you informed, and to equip you for this fourth quarter barn burner we see coming. The underwriting processes you need to know about and those areas necessary to get you through this year-end crunch. That is already happening. The principal has already stopped accepting any informal inquiries, likely through this year-end. We want to help you to generate kick-ass production numbers that you all want in this very strange 2020 year. So here we go. Grab a pencil, because hopefully as we rocket through some of these items, certain clients will come to your mind. First, we're going to get over to Jess, and she's going to give us a COVID update. Take it away, Jess.
Thank you, Jess. Good morning, everyone, or I guess good afternoon, everyone. Okay, so the last time we spoke, we covered a vast amount of restrictions that were put in place by just about every carrier, starting with age restrictions. 6 months ago, we might have had 2 companies that would even consider a client age 80 or over. Now, we're up to about 6 that are looking at these cases, with Hancock kind of rising to the top with their willingness to issue up to age 90. Likewise, there were only a handful that were looking at clients over the age of 70. As you can see, that list now has grown quite a bit. It's at least doubled. And however, for the most part, the older ages, these clients need to be standard risks. Okay. Companies also started putting restrictions in place for folks with pre-existing conditions. Some wouldn't even take the case if a certain impairment was a part of a client's medical history. We've seen at least 2 companies publish that they're rolling that back. They're going to be scrutinizing these cases a little bit more because of the potential influence of COVID if somebody was infected, but we are at least seeing some movement there. Retention has been up and down throughout the last 6 months. Lincoln, who was originally at 20 million, dropped down to 5, and now just announced that they're back up to 10. Prudential was at 20 and recently dropped that to 10 million. PAC is back up to 12 million. Now, there's still very robust auto bind capacities at most of these companies, as well as, the jumbo capacity. Okay. Companies are also starting to slowly loosen up on international travel. And by that, I mean, it's not a flat out postpone until 30 days after you arrive back in the States, which is where a lot of companies are. These guys are going to look at the CDC levels at the companies that these applicants are traveling to, how long they're staying, where they're staying, and they're going to make decisions on an individual basis. But at least it's not a flat out no. Okay, foreign national programs. They're starting to open back up. In fact, I probably could add a couple more to this slide. These programs largely depend on what country the applicant is coming from. And you can see here that PAC specifically identifies Europe, China, Japan, and Canada as their no waiting period. And what that means is some of the other countries, once the applicant is here, they may have to quarantine for 30 days and then provide a negative COVID test before they'll be considered for coverage. Lincoln, for instance, is looking at, they'll accept foreign national applicants as long as they're not coming from, it must be, a CDC level 3 country. Symetra is entertaining foreign nationals to their retention, and just a reminder, they have quite a niche. If the applicant needs to go back to their country of origin, the delivery of all of those documents can be handled electronically, which is very unique to just Symetra.
Let me add something here. Can I add something here?
Yeah.
It's important to know that while some of these carriers are emphasizing foreign national business, you guys need to know that this also includes foreign travel, as Jess started with. The carriers were postponing any foreign travel. If you answered an application question and said, I'm going to go to France in September, 3 months ago, you were postponed. And with many carriers right now, you are still a postponed. So being a US citizen and just traveling internationally is a problem today. It wasn't 6 months ago, pre-COVID. So these are not givens anymore. You just can't travel to Greece or France or England and just assume that you can get the preferred underwriting class that you would have received 6 months ago. It's just not there. You have to ask these questions up front. You'll see that as we get through the field underwriting issues.
Right, but it's nice to know that at least we've got a couple avenues to take if you have a client that's saying, oh yeah, we're going to Paris in the fall for our anniversary. There, we might have some avenues for them now. So that is certainly a favorable change. Okay, we are getting more and more post-COVID infection cases in underwriting, and I imagine we'll continue to see that grow. I imagine it's going to be a part of a lot of your conversations as you start to seek out new business opportunities. So it's really important for you to know what it looks like, what you can tell your clients. Carriers are still asking about known exposure. And if you do have a known exposure to someone, it's a postpone for 30 days. Likewise, if you have a positive test, but you've recovered at home, that is a 30-day postpone from the date the symptoms went away. So important when you're talking to these clients is mark the calendar. Pay attention to the date that I finally don't feel so wiped out, or that cough finally went away, or what have you. Same with exposure, because we need to provide that date to the companies before they will move forward with underwriting. We've even started to see some positive tests where the clients were hospitalized. These are scrutinized, obviously, a little bit more. If it's a case where a 35-year-old just got wiped out from it and needed like a little bit of supplemental oxygen, otherwise healthy, recovered, that's kind of a great scenario. But a lot of times what you're seeing is that person needed to be hospitalized, maybe for some supplemental oxygen, but also has a history of asthma or diabetes or hypertension, and those get a little bit trickier. With these types of situations, carriers are going to want to see the APS, they're going to want to see the discharge summary from the hospital, and they're really going to drill down to how well that person recovered and if there's any kind of long-term complications, which is still really a big guessing game for a lot of the docs, at these companies. And then, of course, there is the most extreme scenario where you end up in the ICU or ventilated. This is going to be easiest 6 months postpone. I've seen some carriers with a year postpone from perceived complete recovery. But there's some significant issues when you're ventilated anyway, apart from COVID. So Dennis, you want to talk a little bit about that?
Sure. I seem to get the worst cases come across my desk, as you know. So it's important to know that Corona is here to stay. Okay, MERS, SARS, COVID-19, they're all coronaviruses. And while a vaccine, if it comes out, when it comes out, may help, it may not. Every person is unique. Some people get the virus without symptoms. Some require ventilators. A vaccine does not mean that this virus is over. Your lifestyles have already changed, working from home and being cautious when you're out in public. You just never know who is going to get this virus and who will be adversely affected by it. This is exactly the underwriting dilemma that the home offices have in their underwriting units. They just don't know what's coming 6 months from now. So everybody is cautious right now, and you'll see that as we go through the rest of this presentation. Now, specific to ventilators here, inducing a coma in someone means that putting them on a ventilator is dangerous for their life, and the side effects can be mild or they can be severe. But as you look at the quote that's on this screen here, historically, more than half of the patients admitted to the ICU and placed on ventilator support are not working within 5 years. These are the side effects of being induced to a coma and having the ventilator support your life. There are long-term neurological effects in some people, and we're only now seeing them after people have gotten out of the intensive care units. Now, why is that important? On the margin at the bottom of this slide, you'll see the morbidity, the LTC, and the chronic illness rider accent, okay? This is important. Okay, now more than ever, you should be looking at products that offer a long-term care rider, an accelerated benefit rider, a chronic illness rider. anything that helps with the potential of a possible morbidity claim in the future, because we really don't know who's going to get this virus in the future. We don't know if the vaccine is going to be successful. We just don't know. But we have the products available today. We have the underwriting available today, and you should be looking at these morbidity issues on these add-on features that are available in these contracts today. It is a very valuable selling tool. Okay. All right, now let's go back into the underwriting units and talk about the technologies that these underwriters have at their fingertips and what we're using today. All yours, Jess.
All right. Like Dennis said in the beginning of the call, underwriting was disrupted in a way I have never seen in the 15 years I've been doing this. Just everything changed so significantly in a matter of 2 weeks. I could have told a 62-year-old diabetic on metformin with high cholesterol and hypertension. You guys call with that type of scenario all the time. I could tell you with my eyes closed what to run. We look at your product, we pick 3 carriers. It is just not like that anymore. So we had to shift gears very quickly. And one of the tools that we've been using quite a bit is Quote Shop. This is a Libra tool that allows us to reach out to about 25 carriers under a kind of a quick quote, no identifiers type scenario. And within 48 hours, we've got feedback from all 25. And this has been kind of like, we're almost double underwriting. As long as we have enough information to get a meaningful quote, because, garbage in, garbage out. If we have enough information up front, it's kind of a way to see who's sticking hard to the COVID guidelines, or maybe have guidelines they're not even publishing. That same scenario I just talked about with the 62-year-old diabetic on metformin controlled with some high blood pressure and cholesterol, I would have run standard all day long for that, assuming everything was well controlled. We're seeing table 4 for the same scenario right now. So to offset that, we kind of we put our oars in the water up front, and then we continue to collect the data and then choose carriers to go out to informally.
Jess, can I interrupt here for just a second? Okay.
Yeah.
Some people on this call may not know what Libra is or what Libra stands for. Okay. Libra is the acronym for LifeMark and Bramco, 2 major marketing organizations that merged last year. We have our own underwriting units in these carriers. We have our own people that stand ready for us. And this Libra Quote Shop is the real thing. We have real live underwriters that are part of this Libra Quote Shop. So it allows us to outline cases very specifically into the Quote Shop engine that goes into our specific Libra underwriting unit underwriters, and they are required to respond to us within 48 hours. So we get real underwriting quotes from our real underwriting team within a very short period of time. And with the COVID environment changing all the underwriting criteria with these carriers right now, it is an invaluable tool for us. Like Jess said, it was easy 6 months ago to look at a 62-year-old type 2 diabetic on metformin and tell you that he could be standard at X, Y, Z, and Q. Okay, but X, Y, Z, and Q have different guidelines now. So our game has changed, and so has yours. This is a tool. All right.
Right. Okay. Another tool, accelerated underwriting. A couple of years ago, we had a handful of accelerated underwriting programs that we felt comfortable recommending to you. Once COVID hit, we saw a bunch of new programs coming out. And then the more experienced companies with accelerated underwriting gifted us with some expanded guidelines, either raising age or face amount. We're watching very closely and pushing them very hard to maintain these new and improved guidelines post-COVID, if there is going to be such a thing. But Julie is going to remind us about some of the better opportunities out there with accelerated underwriting.
This will be a refresher for most of you, but some of our newer folks might not yet be aware of our accelerated underwriting program spreadsheet. It's just one of the many tools and resources available to you through the AgencyONE website, AgencyONE.net. We created this resource specifically so that we and you could easily access the specifics of all the various accelerated underwriting programs, and it's all in this one location on this one spreadsheet. We even have embedded hyperlinks. They direct you to the important marketing materials and guidelines on each of the programs. And we try our very best to keep this up to date as new programs are introduced, as the parameters of these programs change. The most current spreadsheet, if you want to access that, you go to AgencyONE.net, and then it is just right under the Underwriting tab. You just click that drop-down menu, and you can access the spreadsheet there. You can feel free though, if you can't find it or if you have any issues locating it on the website, feel free to reach out to anyone on your team. We'd be happy to send you the most current copy, or we'd even set up a time to go through the website with you. We're more than happy to do that. I'm not going to go through the full spreadsheet, but I do have some highlights that I want to touch on today specifically. Nationwide, they have an option for acceleration in their intelligent underwriting process. Initially, their algorithmic underwriting didn't allow for anything but a best class or preferred without labs. So your client had to hit those very specific criteria boxes to a T so that they would be ineligible to accelerate. They've now restructured this process and have permanently allowed for a standard risk class. That's your standard non-tobaccos and your standard tobaccos. So this opens opportunities for a whole new group of your clientele. They also have, let me see.
Yeah, I'm just going to jump in there real quick, Jules.
Yeah.
So with Nationwide, wasn't one of the carriers out of the gate that was super comfortable going without exam labs. So to offset the risk on their end, what they were doing for us was saying, okay, I don't have enough to get you into a preferred box. The algorithm isn't, hitting it enough. I need labs, I want a preferred. So they were then saying full issue standard. And we sold a lot at standard without labs because they made that concession. So what's nice about this now is they've got enough experience with it that they're adding that rate class to this program, which is one of the most, I don't want to say intelligent because that's what they call it. I'll say intuitive, most intuitive programs out there. Sorry, Jules. Okay. Go ahead.
No, you're fine. Thank you. Thank you for that. One of the newest programs, a few months ago, Symetra introduced their first accelerated program. It's for all of their permanent products, not term, but all of their permanent products. And they came right out of the gate with a maximum face amount of $2 million for your clients that are 18 to 50. The program goes up to age 60, but for the 18 to 50-year-olds, they could potentially secure $2 million of coverage without an exam. I would say, not too long ago, it was difficult to find an accelerated program that would consider face amounts higher than $1 million. So just to mention a few of our options here, John Hancock, Prudential, and Securian have programs up to $3 million. Of course, it's age specific, but it's $3 million potentially. And Penn Mutual's program is up to $5 million. And, that would have been unheard of just a few short years ago. $5 million of coverage without an exam. So when most people hear the term accelerated underwriting, they're thinking young and healthy only. However, Pac Life, they have their smooth sailing program, which could potentially offer your standard and your substandard risks in that 50 to 69 age bracket, up to $1 million of coverage without an insurance exam. Of course, we'd have to provide an APS that shows that they've had a full physical and blood work within at least the last 18 months. But I mean, that's such a niche right there. If you have the it's huge.
Yeah.
Even if an accelerated program isn't an option for your client, we just might have another avenue for your clients who don't want to go through that life insurance exam process. So Jess is going to elaborate on those opportunities.
Well, first, I'll comment on the graphic. This is Dennis showing off his brand new hip in this picture.
Thank you very much.
Okay. All right. So the companies that started working with us a little bit more in terms of satisfying exam requirements using APS information are the four you see here. They're maintaining some flexibility with that. In fact, I think I have them ranked in order. Nationwide and Lincoln might be a tie with how reasonable and how flexible they've been in working with us when we just don't hit that algorithmic decision and they need just a little bit more. And let me show you how they do it. Human API. A lot of you on the call have been great sports and have dove right in to helping us get this information. A lot of the companies that were piloting Human API took it out of pilot, put it right into practice, and started sending out their own links. What they're looking for here in terms of satisfying the exam requirements are build, physical measurements, and then labs within the last 12 to 24 months. And what's beautiful about this is when we needed it and you guys got it for us, we had it and at the carrier in a day. I think the slowest one of these has ever come back is maybe 10 minutes. So this is patient portal information for anybody on the call that isn't familiar with Human API. It's a secure direct link to a dashboard where the client can provide credentials and permission to share that information. It's not a complete APS replacement yet. There's still some limitations, but in terms of helping us get exam labs waived out, it has been an amazing tool for us during the last 6 months. Lab picture. This is another tool we have in our toolbox at AgencyONE, but also one that carriers are touting a lot of success with. This is another instantaneous report. It pulls from Quest Diagnostics and LabCorp. So if your client has had blood work done or any kind of pathology sent through those labs, it will pull in this type of report. So we'll see like the actual lab results. We'll see ICD-10 codes or diagnosis codes. Sometimes you'll get a pathology report, certainly the physician's names. And this has certainly helped a lot of companies be able to do without labs. And it's also helped us at AgencyONE fill holes when you call the doctor's office back and say, you didn't send us the labs. Oh, we don't have labs. We've been able to find them through this route. Prescription database verification. I'm pretty sure most of you have heard us talk about this, but this is another tool that we're using and the companies are using. This shows every doctor that you have gotten a prescription from and filled it, what medication, the dose, when you filled it, even the pharmacy you filled it at. We get a lot of information off these, and it certainly helps us track down doctor information if that's a sticky point.
And Jess, we have all these tools available in our office, correct?
That is correct, with the exception of the one I'm getting ready to show. This is a newer one, guys. This is a lot of companies are latching on to medical claims data. So basically, you go to Dr. Smith for your physical exam. Your elbow hurts. He orders a cortisone shot and physical therapy. You need a stress test and a carotid Doppler because it's of your age. And all of this gets pushed through your health insurance. All of this stuff gets coded, and that's how the doctor gets paid. These reports pull what the doctors have submitted, indicating what you had done, different tests that have been performed, any procedures. All of this is basically just how the health insurance companies pay out the doctors. But it's a really good tool for the carriers to make sure that the information we're providing them matches up with what they're seeing, you know, behind the scenes. So all of these things aren't, another point, all of the ones I just said, even human patient portal information, script check, lab picture, medical claims data, MIB, and the Insurance Activity Index also use post-issue to prevent and deter fraud. Go. Are you waving at me?
My hand here? I
Go.
I need to say something here. There are a lot of veteran agents on this call today. Thank you very much for joining. But this medical claims data information that you're looking at right now is a potential problem that we see. And here's the scenario. And you've all experienced this if you've been in the business a long time. Doctor says, oh, you need a stress test, okay? And he puts down as your reason to have the stress test, chest pain or shortness of breath. And you've never had chest pain and you've never had shortness of breath, but that's how he gets paid. So he's putting this on the medical claims data form. So we come back to you with a very stupid question. Your client said that he had chest pain in 2012, okay? And it's not disclosed on the non-med. What's the story? Well, you know, it becomes a fight, okay? But it's something that we're experiencing more often now because these carriers are utilizing the medical claims data sheets in order to underwrite their files, okay? So you wonder why I have no hair? This is one of the reasons.
Well, okay, I'm going to add to that. As an industry, I think all of the companies are doing their best to try to find ways to make the underwriting process, the insurance buying process, less invasive and faster. All of these tools are, I mean, they're even training underwriters completely different now. All of these tools are just like puzzle pieces that they're trying to put together to get some sort of comfort level to make an offer. It's incumbent upon us, though, in the field to match this information. Because if we submit an informal or a part 2 and leave out all these holes, your case stops. So field underwriting has actually become a lot more important. Because if we want to expedite things and we want to have these companies using their technology to make decisions without invasive testing and, you know, all of that, we have to give that information up front. We have to make sure that
You broke up there, Jess. We lost your, there you go. We lost your audio there for a minute, Jess. Okay.
Sorry. All you did.
All right, let me take this now. As we're coming into the fourth quarter, you've heard a little bit about what's going on in the underwriting marketplace, and now you see all these tools that these underwriters have available at their fingertips and what we have available in our office, okay? And like Jess just pointed out, field underwriting has never been more important than it is right now. As the carriers lean on these technologies, our jobs have changed, and so have yours. Okay, you are being asked to perform a more detailed assessment of your client's medical history than ever before. Okay, if you do so and your client's medical history matches up with the information that the underwriters are obtaining from these sources, then your case will skate through the underwriting process. The accelerated process doesn't have a hitch. But if the underwriting questions are not thoroughly asked and answered by the clients, whether it's your answers on the non-medical or the client's answers in the telephone interview or during the exam process, then the accelerated process or the underwriting process in general halts. There's a hiccup and something has to be addressed. Then you have to go back and ask the questions, and you have to go back and ask the doctors for their full APS. You have to ask the doctor why he wrote down, you know, that the client drinks too much. Okay, there are so many problems that are associated with the agent in the field not doing the field underwriting completely and the clients not being asked the questions or answering the questions as completely and thoroughly as possible. I'm telling you, if you take the time to ask and get answers more thoroughly right now in this underwriting arena, your cases will go flying through the underwriting process because these underwriters want to get these cases off their desks. So if everything is in sync, the cases are approved. and out the door and gone off of everybody's headaches. Okay, but now if we can get the answers to the questions properly and get them through, everything's hunky-dory. Okay, all right.
Yeah, and I would add to that, Dan, really educate your clients, educate them on what happens behind the scenes. It's no different than when you're preparing them for an insurance exam that, you know, they're going to test for drugs or they're going to test for cocaine. So if you smoked a cigar, we just have to know about it. I think that the conversations that you have with your clients need to include, you know, these reports are going to be run. They are going to see what prescriptions you filled. So we really need you to come forward and be thorough with all this information. It just has to match up.
Yeah, let's not forget that on our AgencyONE website, we have the video presentation on how to prepare for the life insurance exam. We encourage everyone, you've heard it, I mean, we nag at you to put your client on that website for 2 minutes. Okay, we even put the prep video out there on YouTube, so it's easy for you to access on the phone and just hand it to your client before the exam. Okay, it's just, I cannot tell you how frustrating it is for us, you know, to get a case in and we're ready to go on the case, and the underwriter calls and says, oh, there's nicotine in the urine, or oh, during the telephone interview, the client admitted to using marijuana once 3 months ago. Okay, and it's not on your application. Okay, you just kicked yourself in the teeth. The client kicked himself in the teeth just for not preparing properly for that exam or that telephone interview. Okay, all right. So moving on here, we're looking at carriers have changed. Yes, they have. No, back that up, Chess, please. Okay, carriers have changed and their niches are no more. Okay, it used to be that we had, if you called and you said, we've got a 62-year-old male diabetic who's on metformin, we knew exactly which carrier had that particular niche. Okay, those don't exist anymore. Okay, there are carriers that are better at certain things right now, but these little niches have generally gone away. Now, why is that? Okay, as we roll down through here, we see that I've written down the glass is even in underwriting. It used to be that underwriters would look at cases and we would negotiate in such a way that the case was half full and not half empty. It's a perception of risk. In this day and age during COVID, underwriters have no perception of risk except a negative one. Everyone is half empty during COVID. So when you guys ask us, you know, is there a company out there that's shaving tables? Is there a company out there that's better at this particular risk or not right now? We have as much up in the air as you do right now, which is why we like the Libra Quote Shop, because certain carriers are coming back into these niches right now. Okay, but if we had 5 carriers that were aggressive in diabetics 6 months ago, now we have 1. Okay, the marketplace has changed. All right, so it's important for you, as we see the tools underneath here, it's important for you to look at the informal inquiry, answer as completely as possible all those questions, ask as completely as possible all those questions of your clients, and get the most complete answers that you can. We are not the enemy here. Okay, we are on your side, the client's side, the attending physician's side, as we try to present these cases into the underwriting units, and we want them to skate through. So prepare your client for the insurance exam properly. Let them look at our little video. That's great. Okay, we will help them through the telephone interview process. They will be asking the clients questions, specifically marijuana questions. If you don't feel comfortable asking your client about marijuana, show him the prep video, because it asks the question, it puts it on the forefront. Okay, if you don't think your client uses marijuana, you might be making a mistake. Okay, but your client during that telephone interview is going to be honest as dirt. He may lie to you to your face because he doesn't want you to know, but most of the time on that telephone interview, they tell the truth and it kicks them in the teeth. So it's much better that you ask the question up front and you get the answer up front. And finally, in the 4th quarter here, these cover letters are more important than ever. We talk about slowing up the underwriting process. These underwriters do not want to stop underwriting any more than you want them to stop. So it's important for you to get a cover letter that tells us how was the amount of insurance determined, who's going to suffer the loss, and how is the beneficiary involved in this death benefit claim? Okay, so it's a pretty simple cover letter. We have little instructions that we've written years ago on how to write a short but sweet and succinct cover letter to the underwriter, but it's your opportunity to present your case. The underwriter wants to read that. They don't like to read between the lines and say, how was this amount determined? Okay, who's going to suffer a loss in this beneficiary column? And they don't want to stop and call us and have us call you and say, what's the purpose of this insurance? Okay.
And I want to add to that in terms of financial justification. It's not just your large cases. We hit a lot of snags with even some of the $1 million cases, you know, where it might be a startup or just not justifiable based on a person's salary. So it's not just for your large, you know, millions and millions and millions of dollars of coverage. Some of these small cases really need a little flavor to them on how you've come to the face amount. So just a little side note.
Okay. All right. We're in the fourth quarter. We are in the fourth quarter. Okay. I want to start this one with don't be afraid. Don't be afraid to send in your tough cases. Okay. There is going to be scrutiny in this marketplace right now under COVID, but don't be afraid to send in those tough cases. While the landscape has changed, we still have some very strong reinsurance relationships. And while a particular carrier may underwrite our negotiated case, say we've negotiated a table 6, for example, that rating class may generate something that has been put into our vocabulary now called a COVID postpone. If you haven't heard COVID postpone yet, you're going to hear it in the final quarter, because as your volume of cases increases and they go into the substandard arena, you're going to have carriers that offer you a table 2 or a table 4, but it's a COVID postpone, because they will not underwrite a comorbidity mortality risk inside the COVID environment that we're in right now. So once the vaccines come out, once the COVID umbrella is closed, we can go back to underwriting some of these cases. Okay, but right now, some of our carriers, not all of them, but many of them are not offering substandard risks at all. They're simply postponing them and labeling them as a COVID postpone for right now. Okay, that doesn't mean you can't get the policy issued. Our reinsurance relationships allow us to negotiate with the reinsurers, so the reinsurers will take that risk and the carrier is off the risk, but we can still get something like, for example, Protective Life. Protective Life has the best table 4 underwriting offer for this particular case, but they are a COVID postpone. They could go out on a facultative basis to the reinsurance pool, and if reinsurance comes back and agrees table 4, Protective will issue that product for us and for you and for your client, and we can put it in force. Okay, so don't be afraid of these tough cases and the impaired risks. Okay, next, what do we got? Companies are taking the older ages. You heard that from Julie. Okay, we've got special upgrade programs that still exist out there. Lincoln sent out a note last month about their BUL upgrade. Some of you remember last year in December, Lincoln offered a table upgrade on their BUL product line. They've offered that already now, coming into the last quarter of the year. So you have upgrade programs for certain product lines that are available right now, little niche-y things that are starting to come back on the arena, okay? You need to know that time service is slow. So submitting an application, an informal inquiry, or even a formal application today means that we may not hear for 7 days. We're in the dark. We don't know. We don't have a case number assigned. We don't have an underwriter assigned. Okay, the time service inside these carriers right now is slow. What does that mean? You should probably gauge yourself right now that December 1st will be your year end. Pretend that December 1st is December 31st. Okay, get your cases in November, because as I said earlier, Principal has already shut down informal inquiries for the year. They're not going to look at informal inquiries. They've got too much formal business. Now, to that end, their formal business is, at last note, I believe 3 full business weeks behind. That means that if you sent a case in December the 1st to the Principal right now, it would not get even set up until December the 21st. And you are not going to get a policy issued and placed in that timely manner. It's just not going to happen. So you need to know that your year end should be ratcheted up here to December 1st right now. All right, and plan with your clients accordingly. Expectations should be set and put out there with your clients right now that this is not going to be a normal December. It's not going to be a normal year end for anybody. Getting a case submitted on December the 15th with the idea of getting it issued and paid for in 2020 dollars, I don't see that happening. So in anticipation of that, we're asking you to think of December 1st as your year end. All right, with that, I think we're finished with the presentation, and we'll go to questions and comments and whatever if you want.
Okay. Just if you have any questions, go ahead and type them into the chat box. We have one so far. Are any companies?
Sorry, Jess. Go on.
Are any companies offering table shaves? Well, I can take that one. Principal still has not done away with their table shave, although I would go out on a limb and say that they are finding ways to not use it. Lincoln has done away with their table shave for now. And we do still have some companies that have, if you're kind of table 2, bump up to standard. But unfortunately, there's just not a whole bunch right now.
Jess, we had a question, and it was regarding the COVID part of the presentation. And I believe that there was a statement that said something about the effect of that we have to wait until the symptoms are no longer apparent. And you had mentioned that there was a 30-day wait. So it's 30 days from what? Does it need to be documented in writing from a doctor? How is that 30-day time period determined?
Okay, yeah, the clock starts when the client has had their last symptoms. Depending on how extreme the case was, you may not even have an APS. You know, you might have a positive test, and then they might have had a tele interview with their, or I'm not a tele interview, but a virtual appointment with their physician. And if they, you know, they had mild symptoms, there wouldn't necessarily have to be an APS or any other kind of verification. They would still take the client's word for it. And frankly, Kathy, we've seen quite a few of those cases where they just took the word from the client. Now, if it was a more severe situation where maybe they still recovered at home, but, you know, the script check showed on meds, inhalers, you know, things that alluded to a more significant case, companies would probably be more apt to ask for some sort of follow-up, which you would expect if somebody had more severe reaction to the virus. But yeah, 30 days from when this last symptom kind of occurs, and, you know, 30-ish days.
Terrific. Thanks, Jess. John, I know that was your question. I hope that answered it. If you have anything else, please type it into the chat box and we will do our best to address it. Another question that came in, Dennis, you had mentioned an upgrade in a variable product from Lincoln. Can you speak a little bit about AgencyONE's ability to underwrite variable cases?
Yeah, those of you who have securities licenses with broker dealers, my broker dealer is the Leaders Group. We operate as a wholesaler broker dealer capacity. We don't retail in the marketplace, but as a wholesaling broker dealer, we have selling agreements that we can put in place with your broker dealer, which effectively means that you're in compliance. So your broker dealer is paid directly from our broker dealer under the national contracts, for example, Prudential. Most of the carriers have national contracts with all the broker dealers out there. So your compensation and your broker dealers are not going to be touched. But it allows us to underwrite cases here, whether it's an index life, universal life, or a variable life contract, because as we underwrite here at AgencyONE, we want to be able to offer you all the tools that are available. So if Lincoln has a VUL program that they're upgrading from standard to preferred, we want to be able to offer that to your client, and we can do that as long as you have a securities license, of course. And we'll put the selling agreements in place with your broker dealer. You know, everyone nowadays is interested in helping the client. It's part of that fiduciary responsibility to assist the client. So we don't get much pushback at all from a broker dealer that's involved, say in the Midwest, that has never seen anything like this before, as somebody else being a wholesale broker dealer. We can work it out. Okay, so don't be afraid of this at all. All right.
Terrific.
And we love
thanks.
There's a lot of
Thanks, Dennis.
negotiation for products.
Great. The next question is there a health questionnaire that should be used on all of our clients to ensure good data for the Libra system, or do we simply need to go ahead and take the informal inquiry we would have taken otherwise?
I can take that. We'd start with the informal inquiry, and then the discussion can take place after that. A great instance would be the client says they have a history of breast cancer, but it's been 5 years or so. We might go back and say, hey, can you get your hands on the pathology report? A lot of times in our experience, clients have that kind of information. And if they don't really have any other significant medical history, we can run the pathology through Quote Shop to see who is going to postpone it, or who is still in like a flat extra, or who might be standard, subject to the rest of the underwriting. Or we might say we need the APS. And once we have the APS, we might make our own summary based on the medical history, and run that through Quote Shop. So the answer is start with getting as much information as you can on that informal inquiry. Then give it to us, and we'll call you, and we'll talk about, what the next step would be, because they're all kind of unique.
Let's not be afraid of this option also. As you're sitting in front of your client and you're going over it, and she says, I have a history of breast cancer, and your eyes glaze over. You don't know what questions to ask. Don't be afraid to pick up the phone while you're there with the client and call our hotline. You see that hotline on the screen right there? Okay. Don't be afraid to call that hotline, because you're going to get one of the three of us on the telephone, likely on the first ring. And we will walk you through the questions we need, and we'll get the answers directly from your client. We'll tell them what to expect in the underwriting process and what we need to deliver.
One more option you have. If you get an informal inquiry, or if you're just having an email conversation with a client and they say, I have rheumatoid arthritis. Julie and I have this bank of email, I'm going to say questionnaire, but we steered away from questionnaire because we know everybody hates filling them out. But it's basically a bullet point of questions particular to a diagnosis with the pertinent information we need to gauge a rate class. All you have to do is shoot us an email, and we'll shoot you the bullet points, and you can forward that off to your client, and we get really good response that way. We'll send us back all the information, and assuming it's enough, we at least can start to ballpark it. And if we haven't made that particular questionnaire or set of questions, we'll make it on the fly for you. We're constantly in and out of multiple reinsurance manuals, so we can see all the criteria that they're looking at. We just formulate questions that are client-facing to gather that information up front and help provide guidance. So just another option.
Great. Thanks, Jess. The next question that came in is, will COVID-related costs be covered by an LTC chronic illness rider?
I don't know how to answer that one. If the LTC rider is kicked into placement, they've got postponed periods and otherwise, but probably yes.
If let's say you were, in the ICU and you were intubated, and let's say I've already got my long-term care in place, and I've got memory issues now, or
and you can't work, yeah.
I got two of my ADLs that are legitimately not functionable. Yeah, you could go on claim for that. I mean, it's just an indirect way to go on claim. I can't imagine you wouldn't be able to.
Yeah.
Terrific. There was also a question as to whether or not this is being recorded. It is being recorded. It will be on our website, and you can reference this on the AgencyONE website or through the AgencyONE YouTube channel. Additionally, Jess, you had mentioned a program specific to Pack Life with Smooth Sailing, and it was in the underwriting offerings. Maybe it was Julie. Yeah, so we just need to make sure that that everybody is clear that this Smooth Sailing program is specific to the Lynchburg office for Pack Life for the promise term in UL.
Yep.
And it's just important that we recognize that. If there are any other questions, comments, please type them into the chat box. Or the question box. We are coming up on the hour, and we are going to try to end this at 1 o'clock. If we don't get to you, obviously, please feel free to reach out to Dennis, Jess, or Julie, or call that underwriting hotline, and we are happy to help. I'm not seeing any other questions. So with that, I would like to take this opportunity to thank Dennis, Jess, and Julie for this very informative and terrific presentation. I also want to remind everyone that AgencyONE is hosting our annual advisor conference during the month of October. We have gone virtual, and you will start to see invitations and announcements coming out about this month-long annual conference. It is going to be held every Tuesday, Wednesday, and Thursday, beginning on Tuesday, October 6th at 12 noon. It is going to be an hour of sales ideas, content, marketing ideas, information as to how you can help build your practice and connect with more clients. So please look out for those invitations. Mark off 12 to 1 on your calendars, Tuesday, Wednesday, and Thursday during the month of October. These are going to be presentations that you are not going to want to miss. And we just thought that keeping the presentations to an hour a day, 3 times a week, was going to be much more palatable to all of our advisors than asking you to sit in front of a computer screen for 5 hours at a time for 2 or 3 days back to back. So we hope to see you during the month of October. You will be hearing from us before then. Again, if you have any questions, comments, or concerns, please reach out to AgencyONE. We are here to help you. As Dennis has said, underwriting is open for business, and we're eager to speak with all of you. So thank you again for your time, and that's the end of this webinar. I hope everybody has a great week, and happy September. Take care. Bye.
All right.
Thank you.
Thank you.